Yeah, hi, good afternoon, everyone. On behalf of Equirus, I welcome you all on this Rolex Rings first quarter FY23 earnings call. From the management side, we have Mr. Manish Merdeka, MD, and Mr. Hiren Doshi, CFO. Over to you, Hiren Bhai, for the presentation.
Yeah, thank you, Mr. Asutosh. Good afternoon, gentlemen. Once again, thank you very much for joining us on quarterly presentation for the first quarter of fiscal 23. Would like to just clear, am I audible?
Yeah, you're audible.
And my screen is visible?
Yes.
Okay. These are the basic slides what we have already informed and discussed earlier. Here would like to just update the numbers that the March 22 the audited numbers were 10,167 million gross revenue with an EBITDA of 240 crores. Here would like to update that company is having almost 40% stake of its product mix towards automobile vehicles, that is more particularly passenger vehicle. Apart from that, 25% will go to the industrial supplies, and more than 32% is going to the commercial vehicle, heavy commercial vehicle, off-highway vehicles, and so on. And for the hybrid and electric vehicles, it is somewhere about 5% of contributes to the revenue. Would like to update the first quarter revenue. In the first quarter FY23, company has a recorded revenue of 287 crores, which consists of 155 crore from the exports, 132 crore odd from the domestic. Again, as it was conversed and informed, company has maintained the EBITDA compared to the previous quarter, as well as a bit on higher side compared to the entire fiscal of last FY22. In this current quarter FY23, company has recorded 709 million rupees EBITDA, which comes to more than 24%. If you see, except this FY20 and 21, which were abnormal years for all, apart from that, company has maintained EBITDA of averaging to 23% and even more. The profit before tax, profit after tax in the current quarter, that is FY23 Q1, company has recorded PBT of 61 crore odd and PAT is 50 crore, which is having a growth compared to corresponding quarter of previous fiscal, and it is more or less on the same numbers what we had in March 22 quarter. Here would like to brief you that company has adopted a new tax regime wherein company would be benefited by effectively almost 9 to 10% of income tax slab. A company has adopted section 115 BBA of Income Tax Act, wherein company would be paying tax at the rate of 25.1%, 25.17%, which was 34.94%. As far as the operating cash flow is concerned, company is having quite healthy cash flow, which has every month company has reduced their debt and even the utilization of working capital. If I'll tell you the net debt, what we had in March 22, which was somewhere about 203 odd crore net debt, as of June 30th, it was 186 crores, and as of now, current date, if I'll tell you, it is touching to somewhere about 140 crore only. So company is consistently just on the backup of operating cash flow, the working capital utilization, and a small portion of long-term debt, company is trying to reduce on monthly basis. As of now, the debt equity, which was there 0.37 in March 22, as of now it is less than 0.25%. Return on equity, again consistent compared to FY22, it is 24% vis-a-vis 21. It was 24%. Particularly in June quarter, if I annualize this number, it would be touching to somewhere about 27.5%. Total income, as I was telling, it is 287 crores vis-a-vis 288 crores of last quarter, and corresponding quarter of previous fiscal, it was 227 crores. Company had a growth of annual comparison on quarter FY22 versus quarter of this current fiscal. It is having growth of somewhere about 27%. As mentioned earlier, company is having same EBITDA, more than 24% in current quarter, as well as it was almost same in quarter 4. PBT, PAT, as I told you, it was 50 crore PAT vis-a-vis 39 crore PAT of March 22 quarter. That is mainly because of tax benefit. Overall revenue of the company consists of 52% of bearing ring and auto components 48%. Particularly in this quarter, it is generally ranging 55 to 45, so on. And the revenue of the company exports, it comes from the contributes by the exports 60%, domestic it is 40%. These are the financials what we have uploaded and the detailed numbers. I would like to open this session for Q&A.
Thank you, Hiren sir, for that opening remark. We'll start the question and answer session. Anyone who wishes to ask a question, please use the raise your hand option. And once you're done asking your question, please lower your hand. We'll wait for the question queue to assemble. We'll wait for a couple of minutes.
Volume maximum. Mute on.
Yeah, we'll wait for a couple of minutes to start the Q&A session. Please use the raise your hand option to ask a question. Yeah, we start our first question. We have our first question from Nisha. Please unmute your line and ask your question.
Hello. Hello, am I audible?
Yeah, please ask your question.
Yes, sir. Thanks for the opportunity. Sir, what is our raw material imported for bearing rings? I mean, what percentage of raw material are we imported for bearing ring product?
For bearing, we do not import the steel. Only for auto component, we import steel from Japan.
Okay.
And overall percentage of my purchase is the imported steel is somewhere about 18 to 20%.
Okay. So what is our global and domestic market share in bearing rings? If we can quantify this.
It would be a bit difficult for us to quantify the global share because, you know, the bearing industry is such a $50 billion bearing industry, and we are into the particular segment of the bearing ring, or rather the rings for the bearing. So overall it would be difficult to tell you, but in the forging segment, for the addressable segment in the domestic market, we can say we are almost 33% of domestic market.
Okay. And sir, so share of our business from Rolex rings, like, hello?
Yes.
Yeah, sorry. Share of business for Rolex rings from bearing manufacturers. I mean, let's say Timken requires n number of rings, and what percentage of what percentage we are being sourced from?
What percentage you mean to say of their sourcing?
Sourcing, yes, of their sourcing.
See, here we do have some exclusivity kind of thing with our customers. the components, the rings, what they are sourcing from us, we are the sole supplier. But overall, you can say with the main 5 customer groups, we are catering more than 60% of their demand for
Okay.
overall sourcing.
Okay, sir. And just last question, sir. We have unutilized land in Gondal, for which we have done MOU with Gujarat government, I guess. So, sir, can you please share the detail? I mean, are we going to lease it, or we will be developing it, or how is this IM going to work? MOU going to work?
As of now, there is no development what we have done, but we are in process to liquidate that land down the line. But as of now, we do not have any plan to develop any technology park or this toy park or something like that.
Okay, okay, sir. Thanks for the opportunity.
We have our next question from Mr. Jay. Please unmute your line and ask your question.
Hello.
Mr. Jay seems to have dropped off. We have next question from Mr. Aman. Please unmute your line and ask your question.
Yeah. Hi. Thanks for the opportunity. I had a few questions. So, sir, if I see our margins, like our gross margins basically declined by around 200 basis points on a quarterly basis. So, anything which is leading to such kind of margin decline for us?
No, it would not be a consistent kind of thing. There is a bit fluctuation of the commodity pricing, steel pricing, where it is having some kind of lag impact in this current quarter. So as such, there is no reduction in our gross margin or not having marginal substantial impact. It also depends on the product mix.
Right. Understood, sir. The next question is basically on the margins again. So, like with the raw material cost increasing basically over the last 1 year, and we have seen a good part of our sales growth basically from the raw material price increase. So, was that leading to some inventory gains, or like how this pass on basically works? Like whenever the raw material is increasing, do we benefit in the interim or for a lag because of the increasing raw material prices, and does it lead to inventory gains for us?
So definitely for the overseas business, we do have some kind of benefit when the raw material pricing is on increasing trend because of certain inventory what we are carrying at various stage, that is on semi-finished, finished goods, even on the inventory which is in transit. So there we are getting some kind of positive benefit over there. But from last couple of months, from June onwards, we are expecting a stability as far as the commodity pricing is concerned, and maybe down the line in this month, we further expect it may go down to some extent.
Okay, so sir, just to clarify on that point only, so when we have our inventory which is in transit, and the inventory we have in factory which is under processing, so we get inventory gains on those kind of inventory, right?
Yes.
And so with raw material prices declining, like steel prices have been declining currently, so going forward we might see some inventory losses on the exports business also, right?
That reduction is only around, the increase was in last 1.5 years was more than 40%.
Right.
But now the reduction is only ₹4 per kilo.
Right, but if the raw material prices decline going forward, then we'll have some inventory loss also, right, going forward?
Yes, we do have, but that is again, but as I told you, that we have a quarterly mechanism with the overseas suppliers and with the domestic on month basis. So if the substantial decrease would be there, it affects our margin, yes, on the inventory.
Understood, sir. So, sir, if possible, can you quantify what was the amount in gains, like due to this inventory for the last year, like in terms of EBITDA for us, like absolute amount which might be due to this inventory gains, if it is possible to quantify?
Mr. Raman, that definitely I will let you know. As of now, the figure is not available with me, but just because of inventory pricing, what would be the additional this thing? We can definitely let you know.
Yes, I'll connect with you offline for that. The next question was basically on this Gondola land. So we were earlier in talks with Gujarat government, but we had basically indicated that we don't want to go for a construction. So are we looking to liquidate that land, or like how we are looking for that land parcel basically?
Yes, that is what I replied earlier also, that we are not going for any kind of expansion over there, or maybe development of any park or so. As of now, we are in the thought process is to just liquidate that land, as it's a big parcel of land, so it may take some time.
And this won't affect our future capex plans because this is not near our factory, right?
Yes, definitely not.
Okay, understood, sir. Can I continue with my questions, or should I?
Sir, there are other people waiting for their turn. We request you to come back in the queue.
Yeah, okay. Thank you.
Yeah. So we have our next question from Mr. Bhargav. Please unmute your line and ask your question.
Yeah, good afternoon. Am I audible?
Yeah, good afternoon.
Sir, in the presentation you mentioned that Rolex has about 80% of domestic market share with top 5 players. My question is, what would be our market share globally for these customers? Would it be less than 5%?
Sir, first of all, would like to correct that in the presentation, the 80% what we would like to show that Indian bearing market, where these players who contributes 80%. It is not something what we have 80% share.
Oh, 80% of revenue is coming in from these 5 players.
No. What we are trying to tell you that 80% of Indian bearing market is being covered by these 5 players.
Oh, okay.
Yeah.
Okay. And our market share with these 5 players would be how much?
Sir, overall, as we mentioned, that almost 30% of our Indian market, bearing ring market, particularly through the forging route, we in an addressable segment, we have that 30% stake, because these players are also producing some bearings which are beyond our capabilities.
And there are three.
No, sir, I was referring to our addressable market.
Yes.
So, okay. And globally, what would be our market share across these top 5 players? Would it be fair to say no single digit?
Sir, it would be difficult for us to tell you the global market for these players or something, because bearing industry, you better know, it's a very wide applications, and the kind of bearing, it starts from say 10 mm to even 10,000 mm or some outer diameter product or something. So it would not be possible for us to tell you the global numbers.
And sir, in terms of new business introductions, if we sort of supply to a US plant of Timken, is it fair to say that the other plants of Timken globally would be aware that we are supplying to the Timken US plant, and hence there is a higher chance of other plants also sort of coming to us, or that would not be the case?
Yes, they have a global team in India.
Okay.
So they call it IPO, International Purchasing Office. So
Okay.
they know other plants also that we are supplier of Timken. And see, we started with only one plant in Italy before 20 years, 22 years. Now we are supplying them in their 8th plant: Italy, France, Romania, USA 3 plants, India, Chennai, Jamshedpur. So slowly, recently they have added Poland. So based on our performance, they keep on adding their new facility. Like I give you example of Escape. We were supplying only in USA before 3 years, and India since last 20 years. But now they have added Germany, then Bulgaria,
Escape,
Germany.
how many plants do we supply for Escape?
Escape we supply in India, USA, Bulgaria, Germany, and recently they have added Mexico, and so 6-7 plant.
Okay, 6-7 plants. And sir,
That 4 plant they have added recently only, before 2 months. So that sample Baji is going on.
and most of this supply would be from India, right? Majority.
Sorry?
Majority of the material which we export is from the Indian entity, right?
Yes, Indian steel supply. Yes.
And lastly, sir, do you share your order book because this business runs on an order book?
Order book as of now for the next 3 months with a monthly run rate of somewhere about 110 to 115 crore per month. For next 3 months, what we do have.
Okay, so your order book is about 350 odd crores.
Yeah, for the 3 months.
Okay, okay, sir. Thank you and all the very best.
We have a next question from Mr. Nikhil. Please unmute your line and ask your question.
Yeah, Hiren, my question was basically, some of the bearing players have been talking about increasing, outsourcing from India for rest of the world in their global network itself, within the group itself. Which you are seeing at your end on the non-auto side, whether there is an increased outsourcing by some of these bearing companies to cater to global demand.
See, like
Mute on. Mute off.
See, like as I said, recently only Escape has added 4 plants and one new customer from USA. They make only industrial bearing. So Regal exhaust and
I'm not able to hear you very clearly, sorry.
Hello?
Yeah.
Is it audible now?
Yeah, much better now, much better.
Just a second.
Mute on.
Domestic માંથી આપણે SKF and chef બધા મોટો ઇન્ડસ્ટ્રીયલ બેરિંગ અને બિઝનેસ સ્ટાર્ટ થયા ચેન્નઈ આતે એક બાટ.
see,
Mute off.
out of India now, as I said, Germany, Bulgaria, then Mexico, this Escape added recently, this 3-4 plant. And Timken also added Poland. So, and one of the industrial bearing manufacturers, they have also started placing order on us. And apart from that, Schaeffler is expanding their capacity in India for industrial bearing. So they have also indicated us that they are going to reach 10,000 crore revenue in next 3-4 years. So that also opportunity we have. Timken has already planted in Chennai. They are also expanding for industrial purpose, industrial or off-highway bearing. So this way we have a good opportunity, and that is for import substitute.
Sir, can you share any values, if possible, of these contracts which you won? How material are these new additional contracts which you've won? What would be the value of these contracts?
See, at present, the samples we are submitting, and for different plants, they have different type of. So they keep on adding the new item. So at present, more than 200 crore rupees from all these customers, we are expecting revenue from next year.
200 crores additional, you are saying?
Yes. See, if you will see from last quarter, now our revenue was 1,000 17 crore
Mm-hmm.
last year. But this year we are expecting 20% growth, 20-25% growth.
Okay. And the bearing supplies are still, I mean, as a company, you are still more dependent on the auto side. But with this increased, demand from some of these global bearing companies for their overseas operations also, do you think there is a bigger growth possible or a higher growth possible in the non-auto side of the business?
Yes, definitely it is possible. As I mentioned you earlier that somewhere about 40 odd percentage as of now my revenue from the passenger vehicle segment. But if you see my industrial, which is being increasing, and apart from that, in EV hybrid vehicle, we are going to have some new customers. So, and for the industrial suppliers also, couple of new US bearing manufacturer, they have recently started, and probably from October onwards we would be starting bulk supply, and which is completely non-automotive, or you can say industrial applications bearing. So the opportunities are there.
Your industrial piece is what, 30% right now? Like if you have to just...
Yes. It is 25-27%. So it keeps on changing, the monthly volume of particular customers.
Understood. Okay, thank you so much. Thank you.
We have our next question from Mr. Dhruv. Please unmute your line and ask your question.
Hi, good afternoon, sir. So my first question was, in the presentation you mentioned that the bearing on the, there was an impact of inventory adjustment from some of the customers and expected to normalize in this month. So wanted to understand, is this from the export side or this is more on the domestic side? And secondly, when you mean by this end of this month, you mean by end of August. So in July also you would have seen a similar impact.
Yes, and it is mainly from the overseas couple of customers who are sourcing, the bearing rings and substantial contributions on a monthly basis. They do have certain inventory pile up and some, this thing lag of that, but they have already indicated us, and we started, producing the new batches of those kind of rings, and it would be supplied from second half of the August and onwards. So we would be coming on track. What we had a couple of percentage loss in bearing ring business in terms of overall revenue. So that would be there in the end of August and preferably partially in the next current quarter, but fully it would be there from October onwards.
Okay. And so the second question was, in the auto components business, if my calculation is correct, you have probably grown at about 58 to 60% on a year-on-year basis in the auto component business, and whereas the top line has grown at about 26%. So what has driven the growth in auto component business? Because on a year-on-year basis, even if I take the domestic industry, it hasn't done as well as what the growth that you have showcased.
Yeah, definitely. You see, out of my overall auto component business, almost 70% business from the 75% business is from the overseas, and we have developed couple of new customers and couple of new plants of my existing customer where we have started supplying certain auto components. So that gives me some upward trend in automotive components.
So will it be fair to say this 140 odd crores of quarterly run rate will continue going forward as well?
Sorry, 140 odd crore? Which one?
So if I break up the auto component, so the total top line was about 286 crores, right? This quarter, and of that about 40% coming from auto components.
Right. Yes.
So that 140 crore, yes.
Yes.
So that should continue going forward.
Yes, definitely it would be. See, the numbers would be continuing. Percentage might be changed. We are expecting in the second, third quarter, definitely the bearing ring, which we didn't have much in first quarter. So definitely the percentage would be changing, but these numbers, definitely it would be continuing or with an additional volume.
Understood. So my last question is on your other expenses. If I look at it as a percentage of sales, the numbers year on year is steady. Sequentially, you've seen a decline. This is, when I compare it with other auto components or any other industrial players, they have seen meaningful impact here led by power and fuel. For you also, it's about 7-8% cost. So how have you been able to manage the other expenses so well? If you could just probably give a little more insights on the other expenses, please.
See, the resources, the power, manpower, and other resources, it has already been established by the company even in the previous fiscal and prior to that also.
We have to increase our utilization.
And the capacity utilization, scale of economy gain, that gives me the better absorption of my cost. And as far as power, particularly what you were mentioning, we do have our own windmills, as well as we have installed rooftop solar plant at our factory, which is somewhere about 1.5 megawatt. And further, we are in process of installation of ground-mounted solar project, which will definitely give us the benefit. And that will not increase, or rather it will give me a positive reduction in my overall cost of electricity.
Understood, sir. Great, sir. Thank you so much and all the best to you.
Yeah, thank you.
Yeah, we have our next question from Mr. Rahul. Please unmute your line and ask your question.
Yeah. Hi. Thanks for the opportunity. Just one question from my side. If I look at slide 7, where we are talking about revenue by end user industry, just curious to understand, how do we know so precisely as to, what is the PV contribution or industrial? Because, correct me if I'm wrong, but my understanding is that our rings will go to the bearing manufacturers and then they will sell it to either a PV or an industrial application, right? So how do we know so precisely the contribution, or are we, kind of deriving it by some sort of a, size metric, or just wanted to understand that?
See, there are 2-3. Sometimes customer tell us that who is the end customer. So like EV, we know that end customer is Tesla, because see, they audit, sometimes audit of is done by end user as well as our customer both. And when they change their specifications for EV, they change their specification, more stringent quality requirement, and they inform us that the end customer is so and so. And usually in auto bearing, the volume is very high, like 30,000, 40,000 every month. And for industrial segment, the value is more and volume is less. So, and looking to the design of the bearing, we can understand that where it is going to be fitted, or the application we can.
So broadly driven through, the design drawing given by our customer and the overall application.
In auto components, the bearings dimensions are small, like maximum 150 mm OD. But for industrial purpose, the dimension is more than sometimes 700 mm, 800 mm, and volume is less, value is more operation. So from that also we can know that application. So,
see, one of our main customers is only supplying auto components or producing transmission for the off-highway or heavy commercial vehicles only. They are not at all into the LCVs and below that. So that will be able to know that this particular application of the product would be in this segment.
Like in auto component, one of our customer in USA, they make the gearbox only for heavy bus, truck, off-highway, military equipment, like that.
Oh. That's helpful. And just on the EV side, where this revenue contribution has been increasing, like now around 4.2%. So is there, what we've heard is that, ceramic bearings, etc., get used in EVs. Is that the correct understanding? And is there some,
ceramic bearing is not used in EV.
Okay. Okay. So, but any, differentiated kind of a technology that gets used in EV where you need more precision or something like that?
Specification, more stringent specification. Like I give you example of, they do the heat treatment. So we supply heat treated component. So in their catalog bearing, RA value is 8. For EV, they have reduced to 3. So accordingly, we have to do the heat treatment for more precision, because in EV the speed of the control, you can say stroke means immediately within fraction of minute the speed increases 150 km per hour or like that. So there they require more stringent quality.
Okay. But then would it be fair to say that since it is a more, kind of complex product, so would it, we have a better chance of getting a higher market share in the
higher
EV
market
landscape?
share and value price also.
In terms of, per piece kind of a revenue you are saying will be higher in that case.
Yeah.
Okay. And any initial, kind of indications on margins on these, or would they be same in line with the company margins overall?
No, definitely it would be having better margin compared to the the regular products, because as our MD just informed, it is having certain value added processes, certain highly precision level output is required. So that definitely the margins are a bit on higher side compared to the regular kind of auto components.
Okay. So in our understanding, where you said that domestically, in the forged rings, we are around 33% market share. Any kind of
Sorry. Hello.
Yeah. Any kind of rough ballpark percentage you can give in terms of what our share could be in the BEV and hybrid product segment?
See, as I was just telling repeatedly, that this 30% number, it is the the overall bearings which are produced through a forging route and in our addressable segment, there we are catering. But for the EV components or this thing, as of now, in a domestic market, none of our bearing manufacturers have started into that.
Okay. So this is not rings related. Basically, this 4% revenue is not rings related at all. It is the other components that we are talking about.
It is rings related, that we are 100% as of now. It is for the overseas bearing manufacturers who are sourcing from us.
Yeah, I understood that. I'm more, not for the domestic market as such. I was referring to our domestic,
Yes.
people
but the number,
in India
yes,
who make
the
domestic.
number 4% is only of EV bearing rings, EV and hybrid bearing rings.
Okay, sure. Thank you.
Yeah, we have our next question from Mr. Sayyam. Please unmute your line and ask your question.
Good afternoon, everyone. Thank you for giving the chance. Am I audible?
Yes.
So, sir, my question is that in the last investor meet also it was told that we are having an order book of 115 to 125 crores per month on an average basis. But when we see the sales of this quarter, it's approximately 95 crore rupees per month. So it's almost a down of 15 to 20% as per our average revenue, which we predicted. So where are we going wrong in that direction? I want to know the reasons behind that, if possible.
We are not going wrong into that. Sometimes even the forecast of customer, that also got changed a bit of thing. In certain case, the availability of raw material would be an issue. And very frankly, in terms of availability of containers for the exports, as you better know that freight part has significantly increased. And I would like to tell you that at the end of the June, more than somewhere about 9 to 10 containers components were ready with me, which we were not able to ship because of timely not available of this thing containers.
My next question is that, like we are also seeing the news, and there has been excess inflationary risk in the foreign countries, and as we are almost dependent on the overseas for our sales, so what measures or what diversification are we doing going forward to take data measures on that?
Touchwood, as of now, from our overseas customers, mainly from Europe and US, we didn't have any kind of indication as far as their schedule go down or lifting less or something like that. But if something will come up, which is beyond our control, and even it's maybe a economical cyclical, then definitely we are, just increasing our customer base. We are adding new customers. And even after adding up a particular new customer who might be working at their 50% production capacity or something, but for me it would be completely new business, and that would at least continue or maintain my momentum.
And how much we have benefit from the PLI scheme of the government?
Not as of now, because mainly it is for the new expansion and based on that. So we do not carry any such huge expansion. So PLI is not as available to us.
Okay, so like as you said in the earlier, we are only sitting on now 140 CR of the debt on the company. So what we are planning forward with the operating cash flows, which are having excess cash flows? That are we going for the expansion, or we are like the company is thinking of rewarding shareholders to that, or we will just sit on the cash? Like, what's the planning for using that cash?
It would be the combination of definitely we intend to rewarding the stakeholders also. At the same time, we do have certain capex plan down the line, 2 years, 2.5 years. Definitely we would be accumulating certain cash for that context, but it would be a combination of all.
Okay, so my last question, I couldn't find the percentage of scrap which we are generating per million tons of the production, so that I could know what is the wastage which we are generating and how we are reducing that quarter on quarter, or are there any efficiency measures related to that? If you could throw some light on that, on the scrap percentage.
Sir, would like to tell you that we are producing, more than 800 to 900 kind of different components. And again, with the size variation of, say, from 100 gram to 160, 170 kg product, in terms of again specifications, that is from 10 mm inner diameter to 900 mm outer diameter. Each product is having their own process, or rather the own design, wherein the scrap generation is deviating. Certain components which are highly value added or rather highly critical, there might be scrap generation of 40% of the input, but at the certain bigger size of components where the scrap generation is not more than 10 to 15%.
Okay, so can we get the revenue breakup of that? The component which is generating more scrap, what is the revenue breakup of that in all our sales?
See, overall, if you see my revenue from scrap is somewhere about 20 odd crore in the Q1 FY23.
Okay, sir. Thank you. All the best.
Yeah.
We have a next question from Mr. Shubham. Please unmute your line and ask your question.
Hello. Hi. Am I audible?
Yes.
Yeah. Thanks for providing the opportunity. Sir, I had a question regarding the export for bearings in our segment as well as for our customers like Escape and Timken. So one of the reason which I had gone through from the SKF and Timken export growth is there is some issues in the Europe as well as in other parts of the world due to macroeconomic issues and war between the Russia and Ukraine. So how you see this trend of the export growth, like the demand only for few quarters, once the macroeconomic situation is stabilized, they will again move back to the base locations only, or you see this is a structural shift from which is coming to India in the export growth side?
See, as I was telling, till now, touchwood, we didn't have any kind of indication from our customers based at Europe, particularly in France, Germany, Italy. Even in few of them are in this one at Portugal, then Slovakia, and there. So we are getting no indication for that. But down the line, if something falls or rather it fall down because of this Russia, Ukraine, sometimes we get an opportunity. A couple of our plant of our customers, existing customers having at Ukraine. Now they have just sourcing everything is or rather shifted those things at Germany. So I was not supplying certain components to the Ukraine. Now it is being added to my Germany customer, and we are supplying that. But as far as microeconomical or rather the slowdown in US and Europe market, definitely it would impact to some extent, and we would like to mitigate or to continue our momentum by adding up new customers in those territories and even in the domestic. So at least it will give me a same kind of revenue of on an average 110 odd crore, 115 odd crore per month, at least for the fiscal.
Understood. And second thing, if you can give us some guidance on the capacity utilization of our plants as of now.
As of now, we are almost at 63, 65, in between 63 to 65% of our utilization.
Okay, got it. Yeah, that's all from mine. Thanks.
Yeah, so due to time constraints, this was the last question. Would like to hand over the floor to Hiren sir for any closing remarks.
Once again, thank you very much for your kind support, and we would like to assure the stakeholders that company is in process of maintaining their margin or increasing onto it, and even increasing the overall revenue by just utilization of capacity, the spare capacity, and company even intends to just move out of from the bank's debt. And as I have already mentioned, that working capital even we are just reducing on month basis, and we would like to be quite healthier numbers in the coming quarters, subject to any kind of abnormal factors or maybe a huge impact from US, Europe, or something which is beyond anybody's control. Thank you very much to all of you. Thank you.